We're just continuing to see investors look at the sentiment that's coming out of the surveys from an economic perspective in anticipating this continued V-shaped recovery. So we've seen the V-shaped recovery in the stocks already. We're anticipating a V-shaped recovery in the economy. And I think that really rests on the fact that despite the fact that we're seeing this pickup in cases, there is not a widespread expectation that we go back to the lockdowns that we saw in March and April. And so if you think about sentiment surveys, they really anchor themselves to the most recent period, which was a very difficult period from an economic standpoint. And so investors are continuing to look forward. They're continuing to see, the second quarter being kind of the earnings trough for this particular recession, looking forward to the third quarter and the fourth quarter and improvement. And really, looking elsewhere, what else are you going to do with your money right now besides put it in equities, given where the bond yields are, what cash is paying with the Federal Reserve going to a zero interest rate policy? So I think there's a lack of substitutes, a lack of available options. But I also think there continues to be this, very firm support in terms of economic data that allows investors to continue to funnel money into stocks.
So Jim Lebenthal, I'll turn to you here. I mean, Shannon brings up this idea that there are very few alternatives out there. There are some that would beg to differ. There are tons of alternatives out there, but it seems as though investors and traders are going with one certain very specific subsector of stocks. That is basically mega cap technology and communication services. We see the action today. Is it really something that we should be hanging our hat on right now, this idea that we can just have a handful of stocks powering the entire market?
Well, let me say a couple of things, and they're going to somewhat contradict each other, Dom. Look, I agree with what Shannon said. There is no alternative, particularly when you look at the major alternative asset class being bonds, right? I mean, there's no, when I say alternative, I mean alternative to stocks. There's no yield there. So people are looking just even at dividend yield on stocks and saying, I've got to be there. Now, I do think this market is ahead of itself. It's going to correct anytime soon. I hate trite aphorisms like the trend is your friend, but the trend is your friend right now. People who are on the sidelines are getting in. Buying is begetting buying. And that's not going to stop unless there is a catalyst to stop it. The virus clearly is not that catalyst. Earnings will start next week in earnest, and they'll come in fast and furious. Maybe the outlook from companies will knock things down a peg. But for right now, you just got to stay with what's winning, and that is the growth stocks. Even as you look elsewhere, maybe in the value stock arena, and I've got some cash, for several weeks I've held about 12% cash. It means the money that's invested is doing great, but I've got a little bit of dry powder for when that correction hits.
Joe Terranova, I will turn to you here. As we talk about the notion that we have so many of these mega cap stocks, Amazon hitting 3,000 for the first time ever, there has to be an argument to be made out there that maybe this isn't the healthiest thing if we are still seeing some struggles from other parts of the market, maybe transportation stocks, maybe it's small cap stocks. What exactly does the story tell you that only the Nasdaq seems to be making these record highs time in and time out over the last couple of months?
So what it tells me is that there is money flow for the beginning of the second half of 2020 that is trying to find a home and chasing the return. And it really is momentum that right now is the predominant strategy. So, yes, there probably is on the part of the investment and trading community an overconcentration as it relates to not just mega cap technology, Dom, but technology and the Nasdaq itself. And that in itself begets a potential problem here in the coming weeks as you come into what is a seasonally weak period for technology. You're vulnerable if you're not rebalancing as technology and the Nasdaq is moving higher, if you're not rebalancing and pulling back what your risk allocation is to more favorable metrics. But I would, again, just say with the massive liquidity, to Shannon's point, that's being provided, and with a 10-year Treasury trading at 69 basis points, you're going to have money that is going to chase the performance. And I don't see for the foreseeable future that will change anytime soon.